Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, October the 13th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of economic data across the pond other than German final CPI came in right in line with expectations at 0.1%. Here in the United States, though, we did get importer prices, came in line with expectations as well at 0.1%, and unemployment claims dropped more than expected. It came in at 245,000 versus the expected 252,000. That's obviously good for the overall market there. The earlier on market was reacting to the downside on that economic data and now has since rebounded. But then we got the natural gas storages came in at 79 billion cubic feet build as opposed to what was expected to be an 84 billion cubic feet. Also, we got crude oil inventories came in and surprised the upside with a 4.9 million barrel build, and it was expected to only be a 0.4 million barrel build. Now keep in mind, I've been talking about this for some time now. It's starting to look like some of that oil inventory is starting to come online. Remember, I talked about 14 million barrels of oil that were sitting in the Gulf and off of the coast wasn't allowed to be delivered due to the hurricane disruptions. Looks like that oil is now starting to make its way into the inventory numbers, and that's why we're seeing that spike. Obviously not being reflected in crude oil, as you can see, up 19 cents earlier this morning off of that data point. It did come off, but now has since rebounded and gone into positive territory, and Keynote is still above that $50 a barrel range. So this is going to be the line in the sand I've talked about, whether or not it can settle up above that $50.60 or $50.80. It tested that this morning, but it came off not too long ago. And on to gold. Gold up $3.70, was up quite a bit earlier this morning when we had the overall equity markets in negative territory. They have since rebounded. Dow was down over 120 points at one time and has since rebounded as well. The bonds not giving up much off of this equity rally that I was just speaking about, but the bonds are up almost a point on the day and right back to the point of control. I talked about this. I think that that's going to want to stay within this range. We did see a breakdown below this 50 Fibonacci level. That's the support and resistance. As you can see, yesterday we rallied right up to it and settled right on it for the most part. For all intents and purposes, today we have rallied back in a way, and everything is starting to line up right here with that point of control where the most time and volume has been spent. That's going to be the comfort zone for the bonds. Now, NASDAQ, as you can see, is still in negative territory, but we did blast down and test its value area high. Remember, I talked about it wanting to try and trade around in this area to fill in this bit of a low volume and time node. I thought we were really going to start seeing that happen, but we have rallied back quite a bit since the lows of the day, which were at 47.54. So we are over 40 points, right around 40 points off of that low. So that was when we were trading down over 60 points on the day. E-mini S&P also, all of these charts are starting to give us that hangman dojo, which is a indication as a reversal. One thing to note also, whenever you get these opposing dojos where you get like a spinning top dojo and then a hangman dojo, tomorrow is going to be the key for the market direction. If we trade above, then that's confirmation of a bottom, but this sometimes is looked at as a continuation pattern, especially when it happens within the move. So tomorrow's going to be the key day as to how that setup is coming about. So nothing really discernible there. Here's the chart of the E-mini S&Ps. As you can see, overnight, basically, we opened up, traded right off. It traded straight down for the most part. Then on the economic data points, we started seeing it go and test those lows, and the euphoria, the market has forgotten about those numbers at this point and are really close to the highs of the day session right now. Then on to the Dow Jones Industrial Average, as I talked about that. It was down. I don't have the DGI, but they were down over 120 points and have rallied back. This dojo, I decided, hey, we broke back below that. When we started rallying, I decided to cover my shorts in DIA. And if you remember, I had on some puts that I put to whoever, I guess, if you will. But I had on the 185 puts. I ended up paying $1.85 for those, or right around there, $1.84, and I put that to them. So I was synthetically short around 183, 183.20ish, and I've been writing those out. I covered some of them not too long ago. I think it was about a week ago or so. I covered those for. Let's see here. I'll look at my field, and I covered those for 180.43. Wrote them out up and down for the most part, and decided to cover them today, the rest of those short DIA ETFs for 180.52. So like I said, I got short those, or I got long the puts on 824 and paid $1.84 for those 185 puts. So that basically, when I put it to them, I was synthetically short at 183 ish, 183.16. So nice profit on both of those trades there. Then on to ULTA. This is the big talk of the day in ULTA, because their CEO came out and said that they are expecting better sales outlook and raise their profit outlook. So that's really caused ULTA to really scream higher. It said basically the company expects shares of 135 to 138 from the previous outlook of 125 to 130. So, and the street's consensus was about 130. So that was a big, huge upgrade on that. And forecast was released to be same store sales 14% to 15% was expected to be 11% to 13%. So ULTA making a huge move today, up $26, over 10% in one day, on a $260 stock. Now, I went in here and I've had on this put spread forever, it seems like, and I had on the October 235 put spread, and I originally paid $1.20, sold it for $1.25, was able to buy it back for 10 cents today. Now, if you look at this, you can tell my 235 puts were being tested back and forth. It was a loser all the way until today, and I actually covered it a lot earlier. Probably could cover it better. I covered it when it was up only about $17, and it's $10 higher. But I looked at it. I'm paying 10 cents to get out. There's no sense in me risking that for any more time on that. I made $1.15 on it in one day, and it was a loser all the way up until just today. So that was a nice little win there on ULTA. That's about all I got for you guys today. Tomorrow we're going to be doing the webinar on the strangles. We're starting to see volatility creep up. I think the VIX was up nicely today. It was up, like in the 17 handle. It may have started to come off now that we are starting to see the market come back. But at the end of the day, it's nice to see some volatility coming back into the overall market. Yeah, the VIX is trading probably around 15, 16, so it's off a little bit from the highs. But nice volatility nice to see volatility coming back in the market. So this will work out perfect for this strangle on a lot of these, albeit we have a bunch of earnings coming up in this cycle, so we can even work on playing this strangle around those events as well. So it's a perfect culmination of all of that. All right, that's all I got for you guys today. Go to protraderstrategies.com, sign up for that. The more the merrier. All right, and if you can't take that, take it easy.